Hello and welcome to CMC Markets Trading Outlook for the week of April the 18th, 2016. My name is Colin Sadinsky, Chief Market Strategist. This week we're going to take another look at earnings season as we move into the heart of earnings season. And we're also going to look at the potential for trading action in gold as well as in oil following the big OPEC and Russia meeting in Qatar being held on the 17th. To start off with, I just wanted to frame a little bit around the earnings report and what markets could be doing during earnings season. As we can see here, to start 2016, we had a big plunge in the stock market. There were two things that really drove the market down. One was concerns about China and its economy, and the other one was a readjustment in expectations of earnings for 2016. Last earnings season, a lot of companies came out, put out spectacular results for Q4, and then guided down for Q1 and for the year 2016. So there was a lot of pessimism out there, and that helped to weigh down stocks. However, following the double bottom in February, we've had a pretty good recovery. Last week, the focus was on China and its data. Generally speaking, it came in even with or better than expectations, so it looks as though the concerns we'd seen surrounding China's economy collapsed and were overblown, and the possibility that the market turmoil in China could lead to an economic slowdown. That turned out to be overdone as well. So we've seen Chinese markets recover. Now the focus is back to earnings season. The next 2 weeks are the heart of earnings season. Ton of big names, big companies reporting should really set the tone and give us an idea of where things are heading. What have we had in the stock market? Well, down here, back in late January to mid-February, expectations were really low. They had really come down. However, over the last 6 weeks, this steady increase in the markets is telling me that the expectations have bounced back. And there had been some concerns heading into the earnings season about price earnings valuations. Now, there's two ways that those can be resolved. If you think the PE is too high, is that either the price can come down or earnings can go up. So far in this earnings season, there's a potential that we could see better than expected earnings, which could then help to bring the multiple back into line. We're coming off a week where a number of U.S. banks reported. The JP Morgan, Citigroup, Wells Fargo all beat the streets, so that was encouraging. This week, there's more banks, but there's a much more broader array of companies set to report, particularly from the technology sector, from industrials, and from many other sectors. So it really broadens out with all the heavy hitters, a lot of the heavy hitters reporting over the next 2 weeks. Looking at the US 30, a lot of Dow stocks are reporting. And what have we seen? We've seen the market kind of leveling off here a little bit heading into the earnings season. We had markets had gotten a little bit overextended. And here, I'll just show this on the if we show the RSI on here, you'll see that markets had gotten overbought. We've had a negative divergence forming, and in this case we're seeing it go sideways. In some cases, we're seeing the markets start to come back down. So we'll be keeping an eye on that over the next week or so, whether we're going to get a sideways consolidation or a more serious pullback. But overall this week, look for a lot of action in U.S. markets in and around earnings reports. The other thing I wanted to highlight here, the second thing, is gold. Gold, in a lot of ways, has been the opposite of the stock market. And what I mean by that was when the market was crashing in January and February, gold took off. Gold took off on a couple of things, but the most particular one was that there was a big flow into defensive havens. People were worried about what was going to happen with the global economy, and so gold took off. At the same time, we saw the US dollar coming back off as people's expectations for the number of Fed hikes this year came down from 4 to 2. So we had a couple of things powering gold ahead to start the year. Now, however, it's looking a little bit more dicey. That looks like a left shoulder. That looks like a head. And that looks like the right shoulder of a head and shoulders top. The neckline here is around 1210. The shoulder resistance is in and around 1260 to 1265. RSI sitting on 50, so it's not way overbought like it was. The negative divergence, though, at the head told us upward momentum was slowing, and now we're kind of back into neutral. So the question is now, do we go sideways, or having broken the 50-day moving average like we have here, are we headed for a deeper correction in gold? And if we do get a positive round of earnings reports and capital continue to go back out of defensive havens into risk markets, gold could struggle in the coming week. The third thing I wanted to highlight is crude oil. Crude oil is also could have a particularly big week. We have the Sunday meeting in Doha, Qatar, between OPEC countries and Russia, trying to sort out this production freeze arrangement. There's been all kinds of talk back and forth recently whether the Saudis and the Russians have agreed to their own side deal or not, or to present a united front or not. And of course the questions still continue to swirl around Iran. Are they going to take a hard line on Iran and try and force them to freeze production at below pre-sanctions levels, or are they going to factor in Iran's return to its prior production as part of the agreement? There's no reason they can't, by the way, make an exception for Iran under the circumstances for it to get back to where it was and then freeze. So we'll see what happens from all of this. But we've had some pretty actually strong moves and steady moves in oil over the last few months. From October to February, steadily down. Look at this following channel. Double bottom. Since the double bottom, steadily coming back up in a rising channel. We didn't get to the top of the channel, but we've run into some resistance here around 41.30. This was the 61% retracement of the October to February decline. So it is a point where you could commonly come into resistance. If you did clear this, you'd have the potential for a move all the way back to the top, up closer to $50, $51. So it is a significant Fibonacci test underway. Meanwhile, you have a negative divergence in the RSI and overbought, so it's not surprising we're getting a little bit of a correction. I think what happened was we had this run up here, people anticipating a deal, getting towards the end of the wing thinking, gee, well, if the best I can expect is a freeze and the freeze is already priced in, then the balance of risks shifts to the downside that, well, what if they don't come to a deal, or what if they come to a deal and people cheat, or what have you. So I think that's why we're getting a little bit of a trading correction ahead of the meeting. If we don't get a deal, oil could definitely drop back here. It could bust 40, maybe even come back, test this around 36.85. If they do get a deal, depending on how seriously or how strong people think the serious the deal is, we could see a rebound in oil in the early part of this week. In general, most of the news that's coming out is earnings reports, and we have a number of names reporting in the tech sector. We've got Alphabet, we've got Microsoft, we've got Amazon, we've got Netflix. So momentum technology companies, we could see a lot of focus on that through the week. Yahoo as well, as people look to see. And that'll be important. Are people willing to go into risk on momentum plays again, or are traders still wary? Those will be kind of key tests of sentiment as we move through the week. In terms of economic news, it's relatively quiet for the most part. We do have some things in the UK. We have employment and retail sales, and towards the end of the week we get the flash PMI purchasing managers reports. The one currency I will show today is sterling. Based on that, we do have some UK reports this week. Generally speaking, sterling had been in a downtrend. We're seeing no positive divergence, higher lows consistently in the RSI. RSI is back up at 50. It's neutral. It's not under the heavy pressure it was previously. I think that the street's fully priced in now. The probability of no UK rate hikes for a while, but no cuts either. It's kind of neutral. I think that we're seeing with these higher lows is that each time we get a pulse down on some renewed Brexit fear, that each pulse has been weaker. This downward pressure on cable is fading, and we do have base building underway. It's a bit of a head and shoulders bottom here forming. We've got support about 140, and first resistance here up about 143.15, then about 144.60 to 145 for cable, which could be active through the week around UK data or any other news, poll results, or what have you. So it's still going to be a busy week for trading, but I think we will see more of the focus on individual stocks and individual sectors depending on the response to earnings reports.